there is a reason why we're gonna look at this market structure of USDJPY, because it is giving us a very clear direction, right? So now, always when I'm teaching, I always focus more about the structure, because the structure, it is what gives us what to trade, right? So that's why we always stick to what the market is printing. Okay, we trade what we are seeing. We just don't guess, but we trade what we are seeing, guys. So welcome. Let's see how we can do some top-down analysis, and we get trading setups that we can really trade. Okay, so now this is your pair, this is your USD JPY, guys. As we've been doing it, we always first look at the market direction, and it doesn't take us many hours and minutes to look for the market direction. Okay, so now for this case, the market is bearish. Okay, after identifying the market direction, what is next? Or is we have to look for our zones. We always trade. There are some people who use supply and demand. There are some people who use resistance. There are some people who use support and resistance. There are some people who use order block level. So it depends. Everyone who use anything, provided it is giving you a very good risk to reward ratio, guys. Right. So now here, this is our USD/JPY. Right. You're seeing how the market is moving, guys. Right. So now, after this, let's first look at this market structure. Right. Let's first concentrate here, right? Okay, this was a low, this was a low, this was a high. Okay, so it made a low right here. This is a low, this is a high. Okay, so now you can see how it broke from here, because here this is a failed low, because it failed to break below this low, right? Because so now it becomes a failed what? A failed low. That means we shall consider this, right? Okay, it is small, though it made a break, right? So now like this here, even this one, it is a failed one, right? So this one is just the liquidity. So now you can see it is also failed low. Okay, so it came here, then it is still moving, still printing some lows, right? So now what should we look at, right? So now after this is our H4 time frame. Or is we use H4 time frame and 15-minute for entry, guys, right? So or is our time frame, it is H4, right? That is time frame used for analysis, and we go and we enter from our 15-minute time frame, guys, right? So now this is a low. Okay, this is a low, this is a low that was broken, guys, from here. After identifying this low that was broken right here, what next, right? You just come up here to this high, right? That made the break. So now this was a high that made a break of market structure. This is a high, guys, right? This is a high. We shall consider that as an high. That is a higher low, right? That made the break of market structure, the downside. After getting it, what next? Okay, so now this is the low that they made, right? We shall also consider it. This is a low that they made, right? Okay, we shall also consider it. So now this is a low, right? This is a higher low and a lower low, right? So now you just bring your Fibonacci retracement to this lower low here, right down here. Okay, to this lower low down here. Okay, then after that we shall look for our 50 fib level, because we always trade below or above our 50 fib level, guys, right? Remember, we always get very many conferences that we look at before entering the trade, guys, right? So if you want settings of this fib tool, you can always tell me in the comment section, and don't forget to subscribe, guys, and like and share this video. So that is our 50. After getting our 50, let's move this. So this is 50 fib level, right? So now we shall always enter when the market goes to the what? To the premium, right? So remember, this is a discount, this is premium. Okay, so now we shall always enter when the market goes to the premium zone. So now always in the premium zones, we have to look for what we call order blocks or fair value gap. Now for this case, there was this order block in our premium, right? So there was a certain order block. You first mark it Okay, and after that, after marking that order block, you also look at the fair value gap. If it is there, it was also there. Okay, so there was also this fair value gap right here. You also mark it. Okay, you also mark it. Okay, guys, right? So after marking that, so now what do we want? Now here, to enter the market, you have to go to your 15-minute time frame, right? For entry, guys, let me show you what we always consider before entering the trade, guys. Right? So now this is where the market came in tapped, right? Always when the market come in tap in H4 zone, when you are on 15 minutes, this is where the market came in tap, right? So what do we consider before entering on our 15-minute, right? Always after the market coming to your H4 zone, when you are on your entry time frame, you have to look for market structure shift, right? So always it will first do what? It will first liquidate some other sellers, right? It will first make the liquidation there. Okay, it will range, but you have to be patient and look for market structure shift before entering the trade, guys, right? So now let's look here. First look and see. Okay, the market was here. It was making some highs, though it was those highs wasn't justified a bit, right? So now when you look at this now, when you look at this high, okay, let me show you. Let me get arrow here. I show you what I'm meaning, guys. Okay, when you look at this high, when you look at this low now, this one, it's not a valid low. Okay, so now it was not a valid low, right? The valid low that we were supposed to look at, okay, the valid low that we are supposed to look at is here. Okay, because those people who use SMC, they would wait for the market to come in and break that low before they enter the trade. Okay, and there are some people who would just do what, and there are some people who would first wait um, uh, for some bearish signals to be printed before entering. What are those bearish signals that you would look at before even entering the trade, guys, right? This market came in, it was ranging right here. Okay, it was ranging, and after ranging it came and break, okay, this range, right? It created, now it started creating some bearish signals, right? Because this was the structure that it was creating, and this structure was creating, it is a bearish structure, guys. As you can see, it was creating a lower lows and higher lows, right? You can see that is a higher low. It was creating lower lows and higher lows, right? So after seeing that, there are some traders that would enter immediately after seeing this. How? Okay, so now after the market breaking this, right? After the market breaking this range, because it was ranging, right? Or is the market will range after reaching the zone. So now after the market breaking that range right there, okay, there are some traders that would actually enter immediately after the range being broken. Okay, after the range being broken, there are some traders who would just take short positions from right here, okay, and they put their stop losses up here. Okay, you put your stop loss up here, and you just do what? You just put your TP right here, anywhere you want, provided you good to go. Okay, so now, and there are some traders, those SMC traders, that would wait for the break over of this low, right? Break of this low, and though the stop loss would be very big, but there are some traders who use a one-to-one risk to reward, and they are profitable with that, right? And because this one, it was actually a 1 to 1.5, like that. There's some traders who would wait for that, and they also enter the trade, guys, right? So now there's very many confluences, and there are very many signals that you can use before entering any trade, guys, right? So now let's go back to our H4 time frame, and we get another zone, and I show you how to use it to enter the market, guys, right? So now we're here. Now let me first delete these zones, and we do another one, guys, right? So now there is another break of market structure right here. Okay, there is another break of market structure on our H4 time frame. Or is, okay, now it has broken. Okay, it has broken that structure. After that, right, Now this one, okay, now this one, there were other blocks that were being considered right here, okay, on these zones before the market actually going there. They were here, okay. Now I want to show you what made some people to enter from there. Let's go to our 15 minutes without wasting any time, guys, right? Without wasting any time, let's go to 15 minutes and we see how these big boys entered the trade from there, right? This is what I'm telling you guys now. This is what I was telling you. Or is the market when it reaches the H4 zone, it will range. It will range, okay? And after ranging, it will liquidate some early sellers or buyers before moving to any anticipated direction has to move to. So there are some people who wait for market structure shifts, okay? Those bearish signals or bullish signals depends to which direction you want to take the market to. Now you can see here, right? Now you can see here very, very well. You can see what was doing here. This was a range, right? It was ranging right there. Then you can see how the market actually did here. It broke our range. Okay, now there are some people after breaking our range. Of course, it has to go and liquidate these people who have put stop losses right here. There are some people who enter immediately after the range here. Okay, after breaking off the range, and they put their stop losses above here. Okay, they always put their stop losses above where, above here. So they are to first liquidate them. Okay, they are to first liquidate those people. But there are those conservative traders that would actually enter after liquidity sweep. Okay. So now someone would just enter after liquidity sweep right here. Okay. You just take your short position from there. Okay. And you risk according to what you want, right? So now also those ones who would wait for market structure shift, they would also be able to enter from here. How? You can see here the market, okay? It was making some higher lows and lower lows. How? Let me show you. So now here you can see this was a high and this was a low. So someone would just wait, okay, for this low. This was a high, as I told you. Let me show you. That is a high. This is a low, you see. That is a high, so it is small, but it was justified. This is a low. So there are some people who wait for this confirmation to say that yes, some sellers have entered the market, right? And after entering the market, yes, big boys, they come when they enter after seeing some bearish signals, right? You can see after seeing that bearish signal, of course, some people they just come and enter short positions after seeing that yes, sellers have come in and they are more powerful than the buyers, right? So you come in, take your trade, guys. Okay, strategy. So let me hope this video has helped you, and we shall meet in next video, inshallah. This is Jimmy. Stay safe and goodbye, guys.